Good morning, traders. It is Thursday, November the 8th. Going to go over a couple different charts and tables this morning. Just going to quickly recap on where we stand in the grand scheme of things. Overall, the election is done. Major banks and brokerage firms and hedge funds are all rebalancing their portfolios now that Obama is in. Obviously, a lot of sectors are getting hit hard. A lot of people were expecting Romney to win, and of course, money was moving into financials, front-running Romney winning, also into energy like coal sector. So yesterday, we're seeing an unwinding of those positions, and of course, that money comes out, and then eventually it'll get reallocated to the areas where investors feel will get the best boost with Obama in place, which is more or less the healthcare area. Anyways, taking a look at the market overall, I think this shakeup is going to hopefully put a bottom in the market in the next couple of trading sessions. But overall, if we just look at the NYSE charts here, we can see the advancing declining shares. Overall, if we just look at these two, these are the two main numbers. Advancing shares, we only had, if you just run the numbers, more or less there's 11 sellers declining shares to every one buyer yesterday, and that is panic selling. I consider a ratio of 9 or high to be more or less extreme panic, and that's usually when we need to start looking for an intermediate bottom in the market. And also when you get these extreme readings, that's when you get the biggest drops, and bottoms are usually put in place within a few trading sessions, 2 to 3 trading sessions. So we're getting very close to seeing the market wash out. Yesterday could have been the day, but overall usually it takes a couple more days once you start to see panic hit the market. And of course, yesterday was a big down session, and all the average traders will be reading the newspaper, watching the news last night, and reading the paper this morning, and they're all going to be in panic mode, going, "Oh my gosh, I got to get out of here. Here we go, bear market, apples and bear market." There's going to be a lot of sell orders probably hitting the tape this morning, and hopefully we get a big push down. And I really want to see a sharp drop and major panic selling hit the market. We might actually nibble on a little long position simply because we're going to have the majority of indicators, sentiment, and things like that showing an extreme level of selling that should turn into a bounce. Now, looking at another chart here, if we just look here, this is the bar chart momentum index. Again, I'll just recap this. I haven't covered it in a while, but long story short, anything over 101 is considered overbought. Anything under 99 is considered oversold. So you get these days where you see the price close up high. Usually that means the next day you see the market pull back. And if it's down in the lower box, usually you see some type of relief bounce. So yesterday, obviously, we had a big down session. We are oversold short term. We had panic selling. So we should be looking in the next 12 to 24 hours or 48 hours a little bounce in the market, if not a market bottom. Looking down at stocks trading above their 20-day moving average, which I find to be very critical indicator here, is simply once we get down into this lower zone, anywhere below more or less 25 down into this area, this is where major intermediate bottoms are usually put in place, and we've been kind of working our way down this level here. And of course, the 50% level means 50% of stocks are trading either above their 20-day moving average, or right now we only have 33% of stocks trading above their 20-day. So the average stock is actually trading in a downtrend. Once we get down below this 25 level, we get oversold, and usually we can see the market put in an intermediate bottom. So if we could get this down in this level here, we see panic selling, and we hit some key support levels on the charts, then we're going to be looking for fishing for a little bit of a long position, because we should see a pretty strong bounce in the equities market. Now, taking a quick look at the overall, back to the normal charts, here's the US dollar index. You can see the major range. We got major resistance, major support. This is, again, going back several years, and you can see we're right in the middle of the whole noise, so we're kind of stuck in no man's land. Overall, looks as though we're forming a possible head and shoulders with Obama in place. We are working up to this resistance zone, and if he gets printing and the fiscal cliff starts coming, we start to see more QE around the world. We'll probably see the US dollar eventually head down, and I wouldn't be surprised if it comes back down into this support zone. Simple measured move. You've got the neckline, you've got the head. If you just flip the difference between the head to the neckline, you flip that to the downside, it brings you right down back into support, and that's where the downward target would be. So obviously a strong sell-off in the dollar will trigger higher stocks and commodities, inflation, all that stuff. Looking at, let's just jump into the other commodity charts. Here's a crude oil chart. Crude oil, really, I haven't liked this chart for a couple months. We are settling down into a support zone. The problem is it is still having some very extreme volatility. We've got broadening formation, which means instability. Really, it's a wild card. It's just getting shaken up left, right, and center, and not really want to get involved with that. Looking at natural gas. Natural gas has had a big pop. Obviously, this is just contract rollover. It's been selling off ever since, and it is working its way down more or less into its previous contract support level, which is down in here. And I wouldn't be surprised if it tries to put in a bottom sometime soon, but overall, I'm not a fan of the chart just yet, and I really kind of want to see this big gap between our trend lines start to fill. It's still pretty lofty up in these levels, and natural gas has a tendency to have sharp moves, and it can drop very quickly. Looking at precious metals, here's the gold chart. We had that big drop there last week. This week we got a big pop. It's starting to form a nice little bull flag. It's starting to actually look relatively bullish here. We had a nice surge up on strong volume, and more or less we're starting to see kind of volume kind of taper off. Nice bull flag. You could almost say this is a mini cup and handle pattern, and of course you flip that cup and handle pattern to the upside, you're looking at us coming right back up into our previous resistance level up here. So we could see another surge to the upside, which it could test the 1800 and beyond. So I am starting to like the gold here, and same with silver and gold miner stocks. They all have the same patterns forming. Taking a look at the bond chart. Here's a 4-hour chart of bonds. We're really starting to see it put a more or less a bottom in. There's fear creeping into the market. We've got kind of a rounding bottom. We've got a key resistance level right across here. You can see it's trading up at resistance, and it did pierce those levels, but overall this is a big resistance zone up here, so it's going to struggle here. And if we do see the US dollar roll over and sell off, we're going to see bonds continue to sell off and head lower. Overall, I'm not a fan of the bond chart. Don't really want to try and buy this breakout simply because it's got huge resistance in this red zone. It could sell off at any time, and I am expecting the equities market to probably put a bottom in here. And of course, if the equities markets do put in a bottom, we will see money flow out of bonds and go into the risk on assets, which are equities. Taking a look at the SP 500, here's a daily chart, and long story short, a lot of people are trying to figure out how to figure out when the market's kind of running the stops and what puts the bottom in the market. Make a long story short, there's a lot of details to cover, but really I'm just going to show you. I've got the easiest way to find key levels of support and resistance, and usually you want to see a running of the stops. You want to see the market flush out. You want to see fear spike up, and when everybody gets shaken out, that's usually when the market bottoms. If you just look across here, we had a previous breakout. This was a previous high way back on the chart, which we had a nice consolidation there. Eventually we broke out with QE3, and now we've come back. We've traded down at this level for a while, holding that support zone, and there's been lots of volume traded. You can see this horizontal volume line. This shows all the volume traded at that price level. So that's where the majority of people got into the market. And over here, this is where a majority of people are accumulating, expecting a bounce to go higher. So there's a lot of people long here, and what the market generally does is it'll shake them out, meaning it drops below this average price where everybody holds entered long. It wants to run those stops and shake them all out, and when it breaks those support levels, this price void here in volume means there wasn't much traded, and usually you can see this gap of no volume that usually gets filled, and you see these big drops, and it'll settle into the next support zone. So it wants to shake all these people out here. And you can see that on the charts by either a surge in volume, or you see here's the volume ratio showing this is like that table, except for it shows it on the chart. It's 11 sellers on the NYSE to every one buyer, so this is a panic spike. So it is running the stops, and you can see it pierced down below it. It did find some support and pulled back up, but overall we're seeing fear into the market. And really, I'd like to see another big down candle or two, which will fill this Big void here of no volume. So of course, as all this volume hits the sell button, there's nobody underneath really to buy it, so you see this big drop right down to the next support zone. So that's kind of where we stand in the grand scheme of things. Taking a look at the SP 500 futures, here are the last 4 trading sessions, and you can see we had a huge sell-off yesterday, big move down, and then we had a little bit of a kind of a dead cat bounce here, and we had some more continued fear, a little selling into the close. Overall, we haven't seen really any strength. It's just been trading sideways in overnight trading. I wouldn't be surprised, and I'm hoping we do get lower prices. I really want to see the market get shaken out really well here, and it could give us a great opportunity to try and pick up a small long position. But overall, market remains bearish, and we are coming close to a bottom. But again, the biggest drops happen right at the bottom. And as I just showed you on the daily chart, there's a big void where the equities market could do this big drop again. We could see another 2.5% drop, maybe not in one day, but over the next couple days to fill that void and really shake the masses out of the market before it bottoms. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.